Time now for our 360 round. For that, I want to bring in our panel to discuss Boeing's latest quarterly results. We've got Noah Hamman, founder and CEO of Advisor Shares, and Melissa Armo, founder and owner of the stock Swoosh, joining us. All right, so Boeing did better than expected. Their bleeding on their balance sheet improved. Adjusted loss, $1.24 per share. That was better than expected. Revenue coming in at $22.7 billion, more than 30% jump on a year-over-year basis. Their cash burn improved as well. Noah, what's your reaction to their results first?
It's great news. It's a nice turnaround, heading in the right direction. As they said on the earnings call, more room for improvement, need to turn the loss into a profit, but really great news for investors.
Okay, Melissa, what's your take on those results?
I really liked it. It looked great in the pre-market, but right now, to be honest with you, it looks absolutely terrible. It has dropped almost 20 points since where it was in the pre-market. There's a possibility of a strike, a union strike that could go into next week. That doesn't look good. And considering the fact that it was up this morning so much on earnings, considering it had the tariff reprieve with the European Union, it absolutely should have held strong today, rallied today, held at least at a bare minimum over 235. And it looks like it's just going to continue falling into the close today. And again, if the market sells off today, tomorrow, the market's been falling too, then this could break 220. And then it's nowhere near where it was this morning. So I did really like it this morning, but it's not holding up on the day.
So that's a great point, Melissa. But, you know, this is a one-day move. Noah, do you think that's meaningful, the fact that it didn't hold up compared to how it performed in the pre-market?
It's meaningful, as she points out. It's a pretty meaningful decline for this kind of company, right? But what I would point out is, you know, it wasn't in April, this was in the upper 140s, right? Trading now at 227. So maybe for short-term traders in what was expected to be nice earnings, cashing out could make some sense. It is a healthy decline at roughly 3.5% right this second. But that's what I'm attributing it to, is more maybe short-term trading today, getting that news. But I do think there's some tailwinds coming, right? She mentioned some headwinds in terms of a potential strike, but if we are also getting into a lower interest rate environment, this could be one of the stocks that would improve nicely based on news like that.
Okay, Melissa, let me ask you this. Kelly Ortberg calling 2025 Boeing's turnaround year. Still, obviously, there's still a loss that it's reporting and wants to get to a profit by the end of this year. How much patience does Wall Street have for its turnaround year?
For some of these stocks that have been underperforming while the market has been blazing, skyrocketing out to brand new all-time highs almost every single day that we get up in the morning. So again, if you look at Boeing, we have one more earnings after this. That's it. Then the year is over. So, I mean, we have less than 6 months to the end of the year, one more earnings season. Market made brand new all-time highs today, and Boeing is nowhere near the highs. The last time this stock was at brand new all-time highs, was over 400, was 2019. 2019. It's nowhere near this. And again, if it drops all the way down to 220, breaks 220, it's in danger of getting to 200. And then it's 50%, more than 50% off the previous highs, which was, again, 6 years ago. When you have a stock like this that is such a big component of the Dow, which I don't always trade the DIA, which is the ETF for the Dow. I usually watch the SPY and the QQQs. But when you have something like such a big component like this, it's nowhere trading where the normal ETF is, you have to wonder what is going on. What is the problems? I'm not saying the stock never recovers. I'm not saying this at all. But to think that it's going to recover between now and the end of the year, when it's got one more earnings season left, and it had lots of chances today to do it. Again, with the tariff reprieve, I just don't know if that's possible.
But to be fair, even with today's move, it's been an outperformer compared to the S&P 500 year to date. And Noah, we talked about, you know, the cash burn improving significantly. I mean, from 2.3 billion, which was massive, to just 200 million. Is that enough to change the narrative for institutional investors, Noah?
I think so, if they keep heading in the right direction, right? Again, not counting some potential issues, but also potential opportunities ahead. But yes, if they keep on this trajectory, I think you can continue to see this stock possibly outperform the S&P as we get out to the end of the year. Again, that's sort of based on what we know today. They got good news on tariffs, probably interest rates going their way, if they can manage some of their company challenges as they appear to have been, I like this stock going into the end of the year.
All right. Thank you, Noah. That's Noah Hamman, founder and CEO of Advisor Shares, and Melissa Armo of the stock swoosh. Thank you so much, both of you.